Gold has been with us as money and a marker of status for thousands of years. But should you be interested in what some call a petty rock? In this video, guys, we will talk about gold and why it still offers a unique investment opportunity. There will be no BS in this video, guys, just a normal one-to-one conversation. Okay, guys, let's begin. So gold is so valuable because of its unique properties. So it's very non-reactive, it's non-corrosive, it's shiny, and people genuinely like that. It is used in industries as well, and it is used as a monetary metal, which means that governments use gold as a sort of universal currency and they store the country's wealth in gold. Gold is very cyclical, which is very good for investors because we can see these long-term trends which can help us to predict how gold is going to do in the future. From the technical perspective, we had this huge cup and handle formation, and gold has been doing unbelievably well for the past year. But why is that? It's because gold is seen as a safe haven for its universal properties everywhere. And because of that, during wars, famines, periods of deglobalization, a lot of people who are not sure of how the stocks are going to perform, they put some portion of their wealth in gold. And that, of course, increases the price. Also, central banks during period of deglobalization, and that's exactly what we are experiencing right now. So we used to live in the world where we wanted to include all countries inside of our economy, like Russia, China. Well, we can see what happened with that. And therefore, right now, the countries are segregated into different pockets. We have the BRICS formation, we have China, Russia doing their own thing. And because of that, gold increases in value. The other thing, guys, when Russia invaded Ukraine, 300 billion of their assets were frozen in Europe. So China, they've seen that, and other countries now seen that. So what they're doing is that they're selling their US treasuries and they're converting that currency into gold, because gold, which is stored in their central banks, in their own storage facilities, cannot be taken from them. And we all know that gold will have value, especially during the period of deglobalization, where countries do not agree with each other and they want to store their wealth into things that cannot be influenced by their enemies. The issue with gold right now is that it already performed quite well, but there is a unique investment opportunity still related to gold, and that's mining stocks. So mining stocks have been unbelievably undervalued for many, many years now. And if we look at the percentage that mining stocks have from the overall stock market, it's the lowest ever, I believe. So it used to be an average maybe like 9%. Right now, I think it's around 1%. And that means that even though gold performed extremely well, the stocks did not, especially the mid-tier and junior companies, because there are some solid junior companies and mid-tier companies. The majors did perform a little bit, but some would say, including myself, that still they have catching up to do. So we are in this unique opportunity where we know that the gold already went up, but people are still not confident, or they don't care about miners at all because they care about crypto, Tesla, whatever. They're not mainstream. Therefore, there is still a unique opportunity in these mining stocks that, they are very volatile, they are risky. Mining is a very difficult business, things go wrong all the time, so this is not a financial advice. However, from an educational perspective, I just want to show you how you can notice these anomalies between the price of metal and miners. And the other useful tool that you could use would be ratios. So you could look at the ratio of miners to gold, very, very low. You could look at the ratio of miners to the stock market, to other metals, to other commodities. So it's really nice to use ratios. They can help you to strengthen your thesis, to see how undervalued or overvalued an asset can be. And then if you could compare all the mining companies to the stock market, you could compare gold to the stock market, and everything is pretty much undervalued in that sector, and even the overall commodity sector. So there is an opportunity there. The only thing is you would need to be able to be patient, and in this sector, it is absolutely normal for you to buy a company, and then let's say in few weeks or a few months the stock declines by 50%, and if that happens with no bad news from the company, or even if the news is interpreted as bad but you believe it's not a big deal, well then you should be happy about it, because that's a perfect buying opportunity for you to make some really, really good money. And so in my case, when I buy mining stocks, I segregate into three different tiers. I will have the big guys like Newmont Mining, Franco-Nevada, Barrick Gold, Agnico Eagle, Wheaton Precious Metals. Now, Wheaton Precious Metals, Franco-Nevada are streamers and royalty companies. Their business model is different. They give companies, mine companies, money, and in return they get a certain percentage either from production, so in actual ounces, or in cash. And it's a great business model. The other companies, however, they are actual producers, so they produce material. So that would be the top tier. The mid tier could be either junior producers or they could be developers. And then the other tier would be just juniors. With juniors, I always use a bucket approach where I would have maybe 20 juniors. Now, those are not 20 random juniors. Those are actually juniors that I believe that all of them should do quite okay. But in reality, most of them will fail. But the ones who do succeed, they will do so well that they will pay for all the losses and give me plenty of money on top. That's sort of how investment into the junior companies works. You have to have a bucket approach. You cannot pick individual companies. So you are picking individual companies, but in a bucket format. So that's sort of the, maybe for some of you that could be interesting, of how you would structure a portfolio in the natural resource sector. If you're interested, guys, I have a completely free how to get started guide. It is not related to gold or mining sector, but it contains a lot of information about well building overall, different paths you can take. I have put a lot of effort into it. So if you're interested, please have a look. I have a well building blueprint course. If you're interested, it's a very, very comprehensive course. I spent a year creating it, which contains everything you would need to know about investing, trading, speculating, business to really get going and start building wealth. Thank you very much for watching, guys, and I will see you soon.